Once we hit that level, everyone and their mother will be talking about the cup and handle of silver, which usually when you have that type of formation, you see a major breakout. And that's the type of stuff that I'm focused on. I don't care about the daily moves in silver. To me, we're getting to that point, and I'm noticing the silver is reacting so well on days that gold is down, on days that the market is down. It's an industrial metal. Everybody is concerned about that because it's an industrial metal. And in my view, we're about to see the monetary side of silver in a large way.
You're watching Silver News Daily. Subscribe for more.
Silver is standing on the edge of a historic breakout, and almost no one is prepared for what's coming. Tavi Costa, one of the sharpest macroeconomic analysts in the game, has been sounding the alarm, warning that a global monetary realignment is unfolding right before our eyes. And when shifts like this happen, silver doesn't just move, it explodes. Think about it. In 1980, silver rocketed from under $6 to nearly $50 in a matter of months. In 2011, it surged from $9 to almost $50 again. Both times the world was facing financial instability, surging inflation, and a loss of confidence in fiat currencies. It's exactly but like what we're seeing today. But here's the difference. This time, the setup is even bigger. We're not just talking about inflation or a temporary crisis. We're talking about a global monetary system that is being rewritten in real time. Central banks are losing control. Governments are drowning in debt. Interest rates are shifting, and the dollar's dominance is being questioned. The same institutions that once suppressed silver's price are now accumulating it at record levels. The cracks in the financial system are widening, and history tells us what happens next. Silver will surge, gold will follow, and those who see it coming will be positioned for a once-in-a-generation opportunity. So what's driving this shift? And why do experts like Tavi Costa believe silver's breakout could be unlike anything we've seen before? Stay with me, because by the end of this, you'll know exactly why silver's time has finally arrived.
I remember talking to your audience about this not too long ago regarding the potential for such a pivotal moment in history regarding the appointment of Scott Bessent and his views on gold and his positioning on gold through his hedge fund back in the days prior to taking up this role. And I still think this is one of the most important things going on. It's a lot of people are dismissing his ideas for political reasons, or sometimes because he used to work for George Soros, when the significance of what he's been talking about, it's one of those things that usually you don't see many times in history. There's a turning point where reserves of gold matter. For a long time, for the last 20 years or so, it didn't really matter. The dollar, in fact, if you looked at from a relative to GDP, the U.S. is not really the highest amount relative to GDP compared to some places in Europe, for instance. But even though we have that situation, the dollar has appreciated versus those other currencies. And so clearly that has not mattered for the monetary system. But now we're in a situation where it does matter. In fact, we're seeing international central banks buying gold like there's no tomorrow. And if you looked at their positioning, their holdings is about at a 50-year highs or 49-year highs, if you want to be specific, while the U.S. is at a 90-year low. And so that divergence is starting to become relevant. And clearly, the U.S. administration is looking to ways of changing that policy in a big way. And as we see that happening, I believe that that's going to continue to drive gold. So those that have either dismissed his role or dismiss gold itself, which has been plenty of people, not in your audience, but certainly in other audiences that have been dismissing regarding, either they're young, they don't know the history of gold, they're learning, they're getting a crash course about the metal, the credibility of the metal, and why it's so important to restore the anchor of a monetary system. So this is quite critical. And in my view, the next history lesson is going to be about silver. We're not too far from that. So notice what's been happening with the dollar. Notice the devaluation of the dollar versus other currencies more recently. And I think that's all part of the plan. The global economy cannot sustain a world where the dollar keeps going higher. And so we're at that moment where the reserves of gold matter and the dollar needs to be devalued at the same time. So I don't know. I don't know another way to say it, but pay very close attention to this because this is probably what's going to set the stage for the investment landscape of this next decade.
Forces are aligning behind silver in a way we haven't seen in decades. This isn't just speculation, it's a structural shift in the financial system, and the smart money is already moving. Tavi Costa has been tracking this closely, pointing out the key macroeconomic forces that are setting silver up for an explosive rally. And it all starts with the biggest driver of precious metals, its interest rates. For years, rising interest rates have been a headwind for silver. But now, that's changing. The Federal Reserve has signaled that rate cuts are on the horizon, and history tells us exactly what happens next. When interest rates drop, silver doesn't just rise, it surges. In the early 2000s, when the Fed slashed rates, silver climbed from under $5 to nearly 50 in just a few years. Every major silver rally has coincided with a shift in monetary policy, and 2025 is shaping up to be no different. But it's not just interest rates fueling silver's breakout. There's also inflation, the silent thief eroding wealth in real time. Governments have been printing money at a reckless pace, and the purchasing power of fiat currencies is collapsing. The more money they create, the more investors look for real assets to protect their wealth. Gold has already started its move, pushing past $2,200, but silver is still sitting far below its historical highs. That gap won't last much longer. And then there's the wild card, geopolitical instability. From trade tensions to banking crises, the global financial system is looking more fragile than ever. Just like in the 1970s, when inflation and geopolitical turmoil drove silver to record highs, today's landscape is eerily similar. Central banks and major institutions are quietly positioning themselves, and retail investors are just starting to wake up. The pieces are in place, the pressure is building, and once silver breaks through resistance, the speed of the move could be staggering. But this is just one side of the equation, because beyond the monetary and financial chaos, there's another force driving silver higher, one that has nothing to do with central banks or inflation. And that's the massive industrial demand that's putting unprecedented strain on supply.
Potential for either a revaluation of gold, which would be one way to fix this issue of the reserves, becoming an anchor again for the treasury market is one thing. And the second way would be through accumulation of gold itself. And a lot of people have dismissed the potential for that to occur again, meaning the U.S. becoming a large buyer of gold itself. And I think that could certainly be a moment in history that we could be returning to. We haven't seen this in many decades, and I wouldn't shock me at all if we are in the process of seeing the increase of gold reserves once again by the U.S. economy, and that would be, we're flirting with, we're not losing the reserve currency status, but we're flirting with it, certainly. And, so these types of policies are almost, it's almost inevitable. They have to happen in order to protect the status of the U.S. dollar. So I do think this is a way of measuring gold. All roads lead to the metal ultimately, and in my view, we're just at the beginning. So you have to kind of think about this as an investor, macro investor. Where gold could be 5 to 10 years from now. That is a roadmap, in my view, of where we could be. And if that's the case, what are businesses that are linked to those things, like miners, or maybe other metals like gold, like silver, or maybe even other things that tend to have a high beta to gold itself as well, such as emerging markets. And so, I think these are really important changes in the macro environment that could be very important as well for allocating capital here in the future.
Silver isn't just money. It's one of the most critical industrial metals on the planet. And right now, demand is exploding at a pace the market simply isn't prepared for. We're witnessing a technological revolution, and silver is at the heart of it. From solar panels to electric vehicles, from 5G networks to medical applications, silver's industrial uses are expanding faster than ever. And here's the problem: supply isn't keeping up. Let's talk numbers. The solar industry alone accounts for nearly 20% of global silver demand, and that number is only growing. Governments around the world are pushing for net zero carbon emissions, pumping billions into renewable energy. The International Energy Agency estimates that solar energy capacity will triple by 2030, and there's no viable replacement for silver in high-efficiency photovoltaic cells. That means one thing: surging demand. Then there's the electric vehicle revolution. Every EV battery, every charging station, every piece of electrical circuitry relies on silver. With EV production ramping up, automakers are securing long-term supply deals, and that's putting additional strain on an already tight market. The same goes for 5G infrastructure, which requires silver-coated components to ensure high-speed, low-resistance connectivity. As 5G deployment accelerates worldwide, so does silver consumption. But here's where it gets interesting. Despite this booming demand, silver supply has been in deficit for 4 straight years. Mining production simply isn't increasing fast enough to meet consumption. Unlike gold, which is mostly recycled and stored, silver gets used up in industrial processes. Once it's in a solar panel or a circuit board, it's locked away in a product that won't be recovered for decades. And that's why supply constraints are tightening like never before. The silver market is at a breaking point. Industrial buyers are competing with investors for limited supply, and this tug-of-war is only going to intensify. When you add in the monetary and geopolitical factors we've already discussed, the setup becomes clear. Silver is heading for an unprecedented squeeze. But this is just the beginning. Because while demand is surging, silver production is facing serious structural challenges. And when you look at the supply side of the equation, you'll see why experts believe the coming silver shortage could send prices skyrocketing.
I would agree with that. And I also think that, that chart is significant because this is a very contrarian opinion about this whole situation regarding the Bretton Woods era, where I think the biggest issue with that era was that the U.S. had to give up a lot of gold as investors and especially central banks, international central banks, were able to exchange dollars for gold reserves. So the U.S. had to provide essentially gold to the rest of the world. Prior to that era, the U.S. had more gold reserves than the entire rest of the world combined. And then since that era, we've had a very large decline. Now, what stopped that, if you look at the chart, what stopped that was actually breaking the gold standard in 1971. So if you want to pick one thing that was positive about breaking the gold standard, that I would mention that would be the one. I mean, it was the fact that we said, all right, enough is enough of giving up on our gold. We got to keep this. And so despite the fact that we let the currency go, at least we kept our gold, and I'm speaking, although I'm Brazilian, I'm speaking as a U.S. I'm a U.S. citizen, although I'm not a U.S. citizen either, but a U.S. worker. But what's funny about all this is that now we're entering a world where, when you look at the dollar itself, and there's a chart in that letter that I show the valuation of the U.S. dollar versus other fiat currencies. And that's such a relevant chart because there are only 2 other times in history we've had hitting this level of extremely overvalued period of the dollar versus other fiat currencies. The moment when people used to talk about, the dollar is the cleanest of all dirty shirts, that, if you're an investor, that's you're not really doing anything about saying this. I mean, you're really reporting the past. No, that's been what's been happening for the last few years. As an investor, you want to pay attention to what's ahead. You can't just say that when the U.S. is in its most overvalued levels in history relative to other fiat currencies, not just other hard assets. And so I think that if you look at those 2 precedents that we had in history, it was 1985 and 1930s. 1985 we saw a coordinated act to devalue the dollar. That was an important period. We devalued the dollar quite significantly, and that sort of inflated the Japanese bubble, and emerging markets did very well, and all sorts of markets internationally were benefited tremendously from those flows that came out of the dollar into other things. 1930s. We're in the middle of the Great Depression, 1929, market peak.
Silver demand is surging, but the real story is on the supply side. Because while industrial and investment demand are hitting record highs, silver production simply isn't keeping up. In fact, we're in the middle of a multi-year supply deficit, and the gap between how much silver the world needs and how much is actually available is widening at an alarming rate. For 4 straight years, the silver market has been in deficit. In 2024 alone, global silver demand reached 1,219 million ounces, while total supply came in at just 1,004 million ounces. That's a shortfall of over 200 million ounces in a single year. And this isn't a temporary issue, this is structural. Unlike gold, where almost all the metal ever mined still exists in some form, silver is different. Most of it is consumed in industrial processes, never to be recovered. Once it's inside a solar panel, an electric vehicle, or a medical device, it's gone. And mining isn't picking up the slack. Silver production peaked in 2016 and has struggled ever since. With fewer large silver deposits being discovered and declining ore grades at existing mines, the industry is struggling just to maintain current output. Many silver mines are secondary operations at lead and zinc mines, meaning supply is dictated by base metal demand, not silver demand. And that's a serious problem. To make things worse, global silver inventories are drying up. The London Bullion Market Association, LBMA, and COMEX vaults have seen their registered silver stocks dwindle as more investors take physical delivery. Even the US Mint has struggled to source enough silver blanks to meet coin demand. When available stockpiles shrink and new supply fails to keep up, the inevitable happens. Prices surge. So what does this mean? It means we're staring at the perfect storm: skyrocketing demand, shrinking supply, and a market that is on the verge of breaking. And when silver shortages start hitting industrial manufacturers, the squeeze will be felt across the entire market. But there's another key metric flashing a massive warning sign right now: the gold-silver ratio. And if history tells us anything, it's that when this ratio gets out of balance, silver doesn't just move, it explodes.
And so internationally, the global economy was at a stage where things were very negative at that time. And so 1931 came in, a bunch of countries, the UK, Germany, Japan, Canada, Austria, very large economies of the time, end up saying, well, we cannot hold this gold standard domestically. So they broke the gold standard in 1931. And so that level of lack of discipline, monetarily speaking, caused the US dollar to actually rally during that period. This is why you see at that chart that I'm talking about that the dollar versus other fiat currencies rallied tremendously at that time and peaked in 1933. 1933 came in. Roosevelt was, supposedly, there were all central banks and monetary authorities were meeting in London, supposedly, to discuss ways of stop this issue with lack of growth internationally, maybe revitalize the global economy in some ways of trading and maybe a new ideas on the monetary side as well. But guess what? The U.S. didn't want to do any of that. Why is that? Because the conversations were not going in the same direction. The U.S. needed to devalue its currency quite drastically, which was something that other economies, were a little bit concerned and maybe not in the same page. And so Roosevelt came out of that conference in a very disruptive manner and ended up devaluing the dollar versus gold, which caused what? And the dollar actually devalued versus other fiat currencies as well. So I think we're kind of in a similar moment right now where most fiat currencies have devalued versus the dollar recently, like i.e. the dollar is the cleanest of all dirty shirts. And now we're at a peak level where we need to devalue the dollar quite substantially in order to restore growth globally again, because the U.S. is sucking all the money from the rest of the world, and the rest of the world has been stagnant on growth. And so how do you restore that? How do you make everything go up again in terms of not just in the U.S. but globally? Well, you need a lower dollar valuation, and so I think that that's inevitable. That's in line with bringing interest rates lower, and the administration cannot say that explicitly. Pay attention to that. They're talking about rates, not the dollar. But that's ultimately what the impact is. It's on the dollar, not on rates alone.
The gold-silver ratio is one of the most powerful signals in the precious metals market, and right now, it's flashing a massive buying opportunity for silver. Historically, whenever this ratio reaches extreme levels, silver follows with an explosive rally. And today, we're at one of the most extreme readings in history. Let's break it down. The gold-silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Over the last century, this ratio has averaged around 50 to 70. But during silver bull markets, it drops dramatically. In 1980, when silver rocketed to nearly $50 an ounce, the ratio collapsed to 16.1. In 2011, when silver made its last big run, the ratio fell to 30.1. And today, it's sitting near 90.1. That's an anomaly. That's silver screaming undervaluation. Every time this ratio has reached these extremes, silver has played catch-up in spectacular fashion. The reason is simple. When gold rises, silver lags at first. But when momentum builds, silver surges with far greater force. This is because silver is a smaller, more volatile market. It has a history of delivering 3 to 5 times the gains of gold in a true bull run. And the setup right now, it's eerily similar to previous silver breakouts. Gold is already moving, pushing toward new highs. Meanwhile, silver is still trading far below its historic peak of $50. If the gold-silver ratio corrects to even 50.1, silver would need to more than double from current levels just to restore historical balance. But this time, the potential is even greater, because while past silver bull markets were driven primarily by monetary factors, today's market has a completely new force in play: industrial demand at record levels and a supply crisis unlike anything we've seen before. So the question isn't if silver will catch up to gold. The question is how fast and how high it will go. And when silver starts its move, the leverage in mining stocks could take this rally to a whole new level.
It's a way of getting all these noise of the short-term movements we've had, and especially the upside that we had recently, the appreciation in gold prices from a trading standpoint can be a bit scary, because you're obviously, the immediately thing you do as a trader, not as an investor, is to be a little concerned about this, such a large movement in the short term. Now, this chart helps you to have a sense of what could be ahead of us. And so the U.S. economy, a lot of folks have tried to value gold relative to other things like money supply, particularly in the monetary base. I think the research that a lot of people have put out regarding gold versus the monetary base is not as relevant. Monetary base is only $2 to $3 trillion. It's really nothing relative to the size of the economy. We're talking about $30 trillion economy. Who cares about $2 trillion here? On that scheme of things. On top of it, even money supply, you look at money supply, we're hovering around $20 trillion, a little more than that. And, again, the economy is $30 trillion. And on top of it, what we do have is an outstanding amount of debt of close to $36 trillion. So take that number, go back in history. That's what I was trying to accomplish with that chart. What's the outstanding amount of debt? And then relative to how much we have of gold reserves. And you can see clearly throughout history that we've had many situations where gold reserves used to be close to, way above what it is today. Back in the 1940s, used to be close to 40%. And then the U.S. had to increase money supply by 150% and leverage up to finance the debt for the war. And so that moment was why you saw the reserves falling relative to U.S. debt. And today we're about 2%. If you only go back to the 1970s, which used to be about 17%, you get it back to about, over $20,000 an ounce. So in my view, the
Silver's breakout isn't just about supply and demand. It's about something much bigger. The entire global monetary system is shifting, and silver is positioned to be one of the biggest beneficiaries. Tavi Costa and other top analysts have been warning that the world is moving toward a massive financial reset, and silver's role as real money is about to become undeniable. It all starts with debt. Governments around the world are drowning in it. The US alone has surpassed $34 trillion in national debt with no signs of slowing down. But here's the problem. The only way out of this crisis is inflation. When governments can't repay their debts, they do the next best thing. They devalue their currencies by printing more money. And when fiat currencies weaken, real assets like silver surge. We've seen this before. In the 1970s, inflation ran out of control. The US abandoned the gold standard, and silver exploded from $1.50 to nearly 50 in under a decade. In 2008, after the financial crisis, central banks unleashed trillions in stimulus, and silver ran from $9 to $49 in just 3 years. And now, the setup is even bigger. The Federal Reserve is caught in a trap. After aggressively raising interest rates to fight inflation, they're now being forced to reverse course. Rate cuts are coming, and that means more liquidity flooding the system, fuel for the next silver rally. And it's not just the US, China, Europe, and Japan are all facing the same pressures. But here's what makes this time different. The de-dollarization trend is accelerating. Central banks around the world are shifting away from the US dollar and increasing their reserves of gold and silver. Countries like China and Russia have been aggressively accumulating hard assets, knowing that trust in fiat money is fading. Silver is money. It always has been. And in times of financial uncertainty, it reclaims its role as a safe haven asset. That's exactly what we're witnessing right now. The cracks in the global financial system are widening, and history tells us that when confidence in paper money crumbles, silver doesn't just rise, it erupts. And the next phase of this rally? It's not just about physical silver, it's about the stocks that are tied to it. Because when silver moves, the mining companies that produce it can see gains that leave even the metal itself in the dust.
In 2021, 2022, we saw a rotation from growth to value, of which we kind of reversed that rotation again. But I would say we're seeing something a lot more significant now, which I think it's maybe sort of a global rebalancing. It's out of US into other places. We noticed today and this other few days that the US economy has been struggling. You're seeing Chinese equities and Brazilian equities and other parts of the world, European equities, European banks outperforming mega caps. All these signs are showing to investors that there is a rotation, or I call it the global rebalancing, out of US equities into other things. I mean, MSCI World Index weight is at a 70% of US equities versus all other countries have, small single digits. And so there has to be a change of that. And I think we're in the process of seeing that. And so I'm paying close attention to this. And so my view is that there's going to be a lot more of that. And so commodities will be one big beneficiary of that. We've all shown this chart of commodities to equity ratio being at, 50, 60-year lows. And the big question is, well, it's been there for a long time and it never turned. I think the biggest reason why it hasn't turned is because the dollar hasn't turned. The dollar has been performing very well. But when you take a look at the 10-year performance of the dollar, it's starting to roll over. And as you can notice, especially year to date, other fiat currencies are up quite significantly relative to the dollar itself. And I think that's the beginning of that rotation or rebalancing. And so commodities should perform very well. Emerging markets, in my view, should do very, very well because it's a green light on their economy. What's the green light on their economy is when you cap yields and you cap the dollar. You can't have a stronger dollar from here. So that means you got to cap it. The same thing goes to interest rates. And, the US can leverage up more, but it has to lower the cost of the debt. So that means lowering rates quite substantially. If that's the case, the dollar has to give up on its strength. And so that means emerging markets have much lower risk than initially perceived maybe a year ago. And so those things are going to change quite a lot, and it will probably provide attract big inflows of capital as we see the dollar losing its value versus other fiat currencies.
Silver's breakout is already in motion. But if history is any guide, the real opportunity isn't just in silver itself. It's in the mining stocks. Because when silver surges, silver miners don't just follow, they explode. Look at past bull markets. In the 1970s, silver mining stocks gained 10 times more than silver itself. In the 2010-2011 rally, silver rose nearly 400%, but some mining stocks skyrocketed over 1,000%. That's the power of leverage. Unlike physical silver, which moves one-to-one with price increases, mining stocks operate on a different scale. When silver jumps, the profit margins for miners expand dramatically, turning modest gains in the metal into massive gains in the stocks. And right now, the setup is even better than in past cycles. Silver miners have been beaten down for years, trading at historically low valuations. Many have streamlined operations, cut costs, and positioned themselves for a rising price environment. That means even a small move in silver could send mining stocks soaring. Take junior silver miners, for example. These smaller exploration and production companies carry the most explosive upside potential. In past silver booms, they've delivered 5x, 10x, even 20x returns. But even the major silver producers stand to benefit massively. With silver still far below its 2011 highs, these companies are operating at prices that barely reflect what's coming. The best part? The market hasn't fully woken up to this yet. Retail investors are still focused on tech stocks and crypto, but the smart money is already positioning itself in silver miners. Hedge funds and institutional investors are quietly accumulating, knowing that when silver breaks out, these stocks can move faster, harder, and higher than the metal itself. The window to get in at these levels is closing fast. Once silver breaks through key resistance levels, the momentum will be undeniable. And that's when the real FOMO begins. But the biggest question still remains: just how high can silver go? With all these forces colliding, monetary shifts, supply shortages, skyrocketing demand, are we looking at a silver rally like 2011 or something far bigger?
Silver is about 80% lower than it was at the peak in the 70s in terms of silver relative to money supply. If you look at the quarterly chart, I think we're on the verge of seeing a quarterly high, which would be around 40, 45. I know silver reached the 50 level, but that's the quarterly candle. And I think that's the first step. Once we hit that level, everyone and their mother will be talking about the cup and handle of silver, which usually when you have that type of formation, you see a major breakout, and that's the type of stuff that I'm focused on. I don't care about the daily moves in silver. To me, we're getting to that point, and I'm noticing that silver is reacting so well on days that gold is down, on days that the market is down. It's an industrial metal. Everybody is concerned about that because it's an industrial metal. And in my view, we're about to see the monetary side of silver in a large way, as we tend to see throughout history. Isn't it insane that we're at 33, 34, even flirting 35 level, and the gold to silver ratio is at a 90? That's just, stunning. That's just, gives you again, a green light to invest in the metal, in my view. And so I am extremely bullish silver. I'm extremely bullish every derivative of gold right now, because gold had its move. Again, it has given us a green light, and now we're starting to see the other things catch up. Silver miners should do very well. Silver should do very well. Emerging markets are starting to do well. Gold miners is starting to make money. Gold miners haven't made money in a long time. We're finally seeing cash flows retest the levels of that 2011 period, when finally they were peaked in that period. That moment was a peak. I think this is the beginning. I think this is the golden age of mining, in my view. And so I'm paying close attention to all these things. I think these are all long-term trends. And, I think the party is just getting started. But
Everything we've discussed, the global monetary shift, the industrial demand surge, the supply deficit, and the explosive potential of silver miners is pointing to one inevitable conclusion. Silver is on the verge of an unprecedented rally. And this time, the move could be bigger than anything we've seen before. Silver's previous all-time high of $50 was set in an era of high inflation and monetary uncertainty. But today, the fundamentals are even stronger. Inflation isn't just a temporary issue, it's embedded in the global financial system. Governments are trapped in a cycle of debt monetization. Interest rates are about to reverse course, and the gold-silver ratio is screaming that silver remains one of the most undervalued assets on the planet. So how high can it go? Analysts like Tavi Costa and other leading experts believe silver isn't just headed for its old highs. It's set to break new ground. Some projections see $50 as just the beginning, with $100 silver a real possibility as monetary policies unravel and physical shortages intensify. If the gold-silver ratio simply reverts to its historical norm, we're already looking at 70-plus silver. And if a true supply squeeze unfolds, the upside could be even greater. The biggest moves in silver happen fast. They catch most investors off guard. But history shows that when silver runs, it doesn't just climb, it erupts. The window to act is before the breakout, before the mainstream media catches on, before the masses pile in. So the question is, are you prepared for what's coming? The financial landscape is shifting. Silver's role in the next monetary era is taking shape, and those who see the writing on the wall will be the ones who stand to benefit the most. If you found this discussion valuable, make sure to subscribe so you don't miss future updates on the silver market. And remember, this is not financial advice. Always do your own research and consult with a professional before making any investment decisions.